What's going on, guys? We're going to do a little bit of a recap on the Nasdaq future. So for those of you guys who are looking for a strategy where you guys can be a lot more profitable and consistent, kind of follow along. First off, my name is D. Anthony with evolutionsTraders.com. I'm a full-time options as well as prop firm futures trader. Now, what we're going to go ahead and start looking at is the 5-minute time frame. Again, this is today's price action. Today is the 29th of November. Now, a little bit of a pullback, okay, and it's kind of to be expected. So the market has been on a magnificent run the past month, a little over a month now, right? Realistically, ever since the end of October. If we look at what happened off the bell, you can see we immediately shoot up, right? Immediately. There was a lot of longs that got trapped. And there was a lot of shorts that also got trapped as well, because many of you guys start trying to short the opening range candle, expecting a big reversal, and this candle did not proceed to stop. So you can see where it opened up at around 16,150 all the way up to a price of around 16,190. So we go up immediately straight 40 points and then all the way to a high of 208. So 16,208. Now, one thing that I do want you guys to kind of keep in mind is that if you did chase this move, make sure you guys have a set profit target where you guys are, taking 10 points, 15 points, 20 points, so forth and so forth. Because the last thing you want to do is get long and then end up getting trapped on the downturn. Now, let's look at the downturn here. As we start to reverse at 7 a.m. Pacific Standard Time, we get this close underneath the 20. We've got this resistance level 1 here that was going to act as support, a resistance level or resistance level 2 and resistance level 1. If you notice, once we start to confirm this loss of the 20 SMA here, we really start to sink. Now, a lot of you guys, what I want to kind of point out is that you want to start putting your stops over that initial bar, okay? So if this is the reason why you're going to take the trade, one thing that you want to do is make sure that you guys are protecting yourself fully, okay? So as you guys are protecting yourself over this one bar, make sure that you have enough contracts that are not going to make you too squeamish, okay? So don't just go start putting on 5, 10 mini contracts and then this thing bounces on you 10, 15 points and then you blow up your accounts. Make sure you're playing small. Make sure you can be able to stomach the moves. Again, this move does go all the way from a price of 16,160 all the way down to around 118. So, you pick up about 40 points here worth of damage that you could have collected and put in your pocket. Now, notice I've got some dotted lines on my screen. This is just a pivot point here, pivot point here, pivot point here from yesterday, support, so forth and so forth. There's extra areas of supply and demand. What is the indicator? It's just called pivot points, okay? It's not persons pivots, it's not this pivot, it's not that pivot. It's just called pivot points. What it gives you is yesterday's high and low price averaged out by some mathematical equation that gives you yesterday's pivot. Yesterday's pivot was sitting down at around 16,023. It gives you a resistance, a support, and then there's another support down below. So you can see we were already well over the pivot from yesterday, well over the 20 SMA. So as we start to lose this area, you can expect to play these zones back down to the next area of support, Now notice how once we start to break this pivot point here at around 720, we break this pivot point, put in a low, we start to consolidate, we start to come up here and backtest this 20 SMA. Notice when we really start to take out that 720 candle here at 810, we go from a price of around 16,083 all the way down into this pivot point at around 16,032. So another 30-40 points there that you could have captured to the downside. Now, we do get a little bit of a bounce off this pivot. Again, green candle taking out red with a stop loss below the low wick is definitely something that you can be interested in. Again, it was a little bit of a slow grind higher. You get a confirmation over the 20 SMA. This was very short-lived. I could see someone getting stopped out here. Again, as the price action just kind of went along in the day, it just tended to go a little bit sideways here. So again, if you're trying to chase every single move, you could be getting stopped out. You're going to have to really use that 1 bar stop system or a previous resistance level or a swing high as a stop. Because again, if you just get in below the 20 period moving average, watch it go sideways for 10 minutes, and then when it closes back over the 20 period moving average, get out. You would have taken a loss on this one. Realistically, you didn't need to, because it does in fact make these lower lows. So again, you can see we consolidate sideways from a price of around, or from a time of around 10 a.m. Pacific Standard Time all the way until we really start to break down at around 12. So essentially 2 hours, we weren't really doing too much. Again, guys, I'm going to be live on YouTube tomorrow. So if you guys do want to tune in, make sure you guys tune in. If you guys want to join the community, get access to the courses, all of that information is down below. If you guys are looking to get funded, Top Step is a beautiful funding program to get funded with. Definitely take a look at them as well. So you can see we drop into this pivot point here into the close at around 12:20, 12:30, and then we kind of just consolidate with a little bit of a dead cat bounce into the close. So again, what are we realistically looking at here? What we're looking at here is essentially a downtrending day that I could see people getting stopped out on or getting chopped up if you're playing too many contracts. If you're expecting to get into the move and expecting it to wash 20, 30, 40 points in a matter of 5 minutes, you've got to position yourself in a way where you can be able to withstand some of these bounces, withstand, 30 minutes, an hour worth of consolidation before we make that new low. I think the best thing you can do is, if you're going to take this short position here, will position yourself so you can stomach a break over that high wick. If you're going to take a loss of the pivot point here, once we confirm here, then you're going to have to use a stop loss above this swing high, right? Again, if you're going to take the bounce off the pivot point, what you want to do is you want to use the low wick, any close below that, as a stop. This trade here is a little bit tough. I would say that this is going to be a losing trade, but this short trade here, again, swing high as your stop, right? If you use a swing high as your stop, notice that we never come up and close above that swing high or this resistance level. So again, if we never get above this supply zone, even though we're chopping sideways, yes, you might be in a little bit of drawdown, you have to be able to be position sized enough to where you can sit through these moves. Because if you can't sit through these moves, A, you're going to lose a lot of money. B, you're going to mentally drain your equity. And you're going to get very, very frustrated, causing you to over leverage, oversize, revenge trade, this, that, and the other. So again, if you guys want to trade with me and the team each and every single day, those links are down in the description box below. If you guys are interested in getting funded, that's also down in the description box below. But I'll see all of you guys on the next video.